Christ is king, it's where we belong. Stay with the dream, don't lose your way. Right way's the fire that'll light the day. Keep it simple, let the moment arrive. 3-8 trap keeps the hope alive. Hold on tight till the signal's near. Right way's the trail, we're breaking through fear.
Good morning, fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for September 5th, 2025. Well, what a day we had yesterday with very, very low breadth, yet the market surged. Got some new record highs here in the market, and today we are facing that big jobs number with a little bit of uncertainty showing up in the futures. So how about we take a look at what's happening or what happened overnight. If we take a look at Asian markets, all bullish. The president normalized the Japanese auto tariffs to 15%, and that seemed to inspire all of Asian markets higher last night. We had Australia up 44.70 or 0.51%. Hong Kong rallied 359.47, 1.43% higher. South Korea up 4.29% or $4.29 or 0.13%. There we go. The Nikkei up 438.48 or 1.03%. We saw India up $6.70 or 0.03%. In Shanghai, rallied 46.63 or 1.24% last night. So very, very bullish. We're also seeing a lot of bullishness this morning across Europe. We've got the DAX higher this morning by 47.54. 0.20%. FTSE is up 1812, 0.19%, and the CAC is up $2.22 at 0.03%. If we look at U.S. futures this morning after the Broadcom report last night, Big Tech is still pushing hard to the upside with the NASDAQ futures up 116.75 this morning. We've got S&P 500 futures are up $13.50 this morning, and NASDAQ or Dow futures are down at this moment at $22 as we wait on this number this morning. So a little bit of uncertainty. If we take a look at bond prices this morning, bonds are just slightly weaker here this morning heading into this number. We've got the 2-year bonds coming in at 3.58%, 10-year bonds at 4.15%, and those 30-year bonds coming in at 4.85%. Now, why is that happening? Why are we dropping? Well, right now the market is really hoping that the that the job numbers are bad, because if the job numbers are bad, that would give the Federal Reserve cover to lower interest rates, and the market seems to be much more concerned with getting a rate reduction than worried about what's happening in the jobs market. So it'll be interesting to see what happens here today. And whether or not we'll be able to, how the market's going to react. And yesterday was all about bad jobs number, so we're probably going to get a rate cut, and the market just zoomed on that. Now remember, we don't get a rate cut decision until the 17th of this month, so we've got a little bit of time to wait here on those numbers. So keep a close eye out. Anything is possible in this market. If we take a look at what's going on with the U.S. dollar this morning as a result of those bonds, well, we've got the dollar moving down here this morning. Right now, the dollar's down 40 cents here this morning, moving back lower. And obviously, when that happens, we usually see precious metals moving back up. And this morning, we've got gold moving just slightly higher, up $1.30 an ounce here this morning at $3,607 an ounce. Silver, however, is down less than a penny in the silver futures at 41.41 an ounce here this morning. Copper, we've got copper moving back up. Yesterday, copper had quite a bit of volatility in it, dropping hard and then rallying strongly back up, and now we're following through to the upside this morning. Right now, copper futures are up not quite, well, just a little over 2.5 cents here this morning, pushing higher here in COPX, FCX, copper miners here looking pretty good overall. If we look at platinum, platinum had a really rough day yesterday as well, dropping substantially, but it's trying to push back up a little bit here this morning, up $11.80 an ounce, while palladium is continuing to see just a little bit of weakness, down $2.80 an ounce here this morning. So a little bit of mix in those precious metals. Now, we're not seeing a mix in the cryptos. Cryptos had a really rough day yesterday, moving down pretty sharply. But boy, this morning we are gapping up and moving big. In fact, we're bullish across the board this morning in crypto markets as the dollar falls. $2,433 a coin here this morning, or 2.21% in Bitcoin. And Ether right now is up $136 a coin, or 3.18% here this morning. So really getting a bounce back here in those cryptos here this morning. Let's take a look at what's happening in oil today. Well, we continues to suffer in oil. Oil pulling back here this morning, down 40 cents at 63.02 a barrel. Brent crude is coming in at 66.76 a barrel, and natural gas is still trying to show just a little bit of bullishness here, up less than a penny here at the moment, but trying to, for something we haven't seen a long time here in natural gas, little tiny uptrend maybe starting to emerge. We'll want to watch that carefully here in natural gas, so keep a close eye on that. So what does all that mean for the day? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the Morning Market Prep video. Good morning once again, everyone, and thanks so much for being here. I very much appreciate it. Let's take a look at these charts, see if we can figure out how we might want to approach the market for today. Remember, we want to look at these charts for what they are, not for what we would like them to be, and really try to shake off that bias and really focus in on the price action of the charts. Well, I got to tell you, yesterday it turned out to be very surprising to me. I don't know if it was just as surprising to you, with jobs numbers that weren't too stellar and the market just celebrating the idea that we may get a rate cut. New record highs here in the diamonds yesterday to close, and looking strong here today. Very bullish in this pattern now, and the only way you can look at this chart is seeing that bullishness and that possibility that we could stretch on higher here today and have more record highs going into Friday. And Friday has been one of those days here for quite a long time that we celebrate and rally. So I think there's every reason to believe that's possible. that we could see blue sky highs here in the diamond. So no reason to believe that we can't. Now, if the bears were to get anything in that jobs data, and if we happen to be disappointed on that jobs data, and I almost got to say right now, if the jobs data comes in strong, the market might be disappointed with that, because that would maybe put a lid on the excitement for a possible rate cut. So I don't know how to, anything is possible here. If the bears were to push back, well, you can see we've got a little bit of price support in some of these levels in here in the chart that we could push back into here and still hold, and there would be no harm in a little bit of rest or pullback in this. In fact, we could consolidate in here for some time, and that wouldn't be any kind of a problem here for the market. If we were to, however, break this back down, break below some of this support, and actually push back below yesterday's candle, meaning whipsaw. And I'll show you why I think whipsaw could be a possibility. If we were to whipsaw this all the way back down below yesterday's candle, that's where some concern will come in. And I think the possibility of big point moves in whipsaws are possible because our breadth in the market was so low yesterday as we continued to rally. As a matter of fact, we rallied 3 days on declining breadth, which is a little bit of concern for me at the moment. Now, if the bulls can continue to push, then maybe it didn't mean anything at all, but let's watch that closely. If we take a look at our SPY had a really good day yesterday as well, pushing up. And as you can see here, we got a new closing high here in the SPY, new record highs in the SPY, and we're gapping up this morning. So new record highs here in this morning. Once again, we rallied on weaker than normal breadth. So we'll see if there's a possibility of that whipsaw today. But right now, all you can do is look at this chart as a complete reversed move here, and bulls just chasing into trades here at the moment. No concern here at all on those bulls. Now, if the bears were to have anything to say, a pushback into here to retest the high of yesterday's candle, no harm, no foul right there. That would be no problem if we were to rest back. But if we start pulling back, if we were to get some bad data in here and we start testing some of these top candle tops in here and pushing back down, if we were to cross back down through the middle of this candle, that would raise a little bit of concern. They call that a piercing candle. That would be a bearish piercing candle if that were to be the case. But we still have trend and support here to hold us in the chart. So I'm not sure that would be terribly devastating at all, unless we were to once again reverse that entire big candle here. Reversing that candle or whipsawing that candle would be where the concern would rise, and then we'll have to start looking for other areas of price support. But I got to tell you, right now, coming into Friday, the excitement that we've been seeing on Fridays, no reason to believe that we pull back. It's just all bulls all the time, unless we really stumble somehow in that jobs number this morning. Now, QQQ still has a little bit of risk in here, a little bit of concern, because we rallied up into that downtrend, but you can see the Broadcom report gapping us up this morning, gapping us through this area here in the chart with lots and lots of excitement here on QQQ. So if we can continue to hold that, then I would look, if the bulls can continue to push, then I would start watching these areas up here where we can start stretching on up, testing some of these resistance areas in the chart and pushing back up toward all-time highs. And I think there's every reason to believe that could be possible. However, if the bears were to have anything to say today because of that jobs number, first place I would look would be a pushback in here to fill this gap this morning, and we'll want to keep an eye on that. No harm if we fill that gap here this morning, but if the bears were to keep pushing and we were to break back down below this trend here, this trend break. If we were to push back into here, again, that piercing candle in here would be carry more weight here than it would in the SPY or the diamonds trade, and it's just simply because we'd be coming in at a lower high. So again, probably no major concern in the market unless we were to retrace that full candle of yesterday. And if we were to do that in some kind of a whipsaw or bad news event here, then the bears could start taking over here. But for now, it's all bulls all the time here in the market. And IWM made it up here to retest resistance. In the chart this morning, we're trying to gap through to break these highs in here. So bulls are definitely in control in here. The next target up, notice that we still have a long ways to go to make new record highs here in IWM. I put that next target right up into here against that little bit of resistance. So a good stretch with those bulls today, maybe up here testing that level. If the bears were at all to push back, and we would look in here for maybe that little double topping pattern, if the bears push back, then I would look for that pushback into this area of price support in the chart, and we're still up above trend, so nothing in there would be bearish unless we were to really get going to the downside here in IWM. And right now I don't see anything that's going to provide that catalyst to do that just yet. Anything is possible, and here's why I think anything is possible. We'll look at some of those internals here in the market. You'll notice that we're making new record highs. Diamond SPY, IWM pushing to new recent highs here in the market, and yet we're doing it on a VIX that's higher. We have not been able to retrace that VIX all the way back down here, so we still run that risk. If we find some kind of reason in here for those bears to attack, we could still create that higher low here in the VIX. So something just feels a little bit off to me, and maybe it's just I need more sleep or something. But right now there's a little concern here yet in the VIX, with a higher VIX at new record highs. So watch that carefully here on the day. If the bulls can continue to push in this big gap up this morning, maybe we continue to see this push right on down, and maybe there's nothing here at all to worry about. It's just pile into the market. So watch that carefully. Now, if we take a look at our T20s, our T21-22 indicator here, by the end of the day yesterday, because we surged so much, we're back up here in the bearish reversal zone. And with the gap up in the NASDAQ and the SPY this morning, I'm going to suggest that we probably will be well into the bullish reversal zone here at the moment, unless we stumble in some of these economic reports. Well, jobs report, really the only one that matters this morning. So, and really the only one for this morning to be concerned about. So watch that carefully here. We could easily kind of top out here in T21-22 on this exuberance. But if the bears were to have anything to say, I just want to keep everyone in the loop here on that idea of a potential. If we were to whipsaw this, we've got a big open area here to the downside. And I'm not rooting for that. I want everyone to understand I'm not rooting for that. I really don't care what happens here. I just want everyone to be able to see that possibility here in the market, that we're really, really extended and stretched out here in the market, and we did it on weak breadth. And we'll look at that here. T2108 had a good response back up, but here again, T2108 didn't make new highs as we were making new highs in the market. Pushing back up here to test this recent resistance though, holding bullish trends in here. We were worried about that maybe coming apart here just yesterday. Nope. pushed right back up here. We didn't break out though, even though we made new record highs. We didn't break above this resistance. So with the gap up this morning, I would look for that stretch up through here, and we'll start progressing up toward the 70% area here in T2108. Now I will remind everyone, up here in the 70% area, for the last couple of years, we have struggled to get above that. That gets really frothy up here, an overbought situation. Now, in the past, we would go somewhere between 70 and 80, and that's where we would run into just that extreme overbought situation and pull back. So watch that carefully as we approach this resistance up here, if we happen to find any reason for those bears to come back in. If we take a look at T2107, percentage of stocks above the 200-day moving average, same thing. We stretched up to new record highs, but we didn't break these new recent highs here in T2107. But with the gap up here this morning, I'm going to suggest we'll pop right up through there past that 55 area here in the chart, and we'll be coming into this major area of price congestion here in T2107. You will want to notice once we push up here toward about 60, and it's usually 60 to 65 area here, we run into that very, very frothy area of T2107, and we typically find reasons to pull back from there. So watch that carefully. And then T2101, this is the thing that concerns me more than anything. The last 3 days, as we have rallied up, our market breadth has continued to fall. We haven't seen breadth following this move. So this lackluster breadth puts us in a situation where if we were to stumble today in that jobs number, and I'm not suggesting that we will, but if we were to stumble today, this weak breadth really opens the door for that potential big whipsaw here in the market if we should stumble. So watch that carefully. Continuing to rally on such weak breadth also puts us in a situation that we need to be really watchful of that potential reversal in the market. So keep a close eye on that. If we happen to start seeing a little bit of selling coming in, this could be a bit of a problem for us with such weak breadth. If we continue to rally today and continue to see that breadth decline, again, that's a real concern here. We need to see, if we're going to rally today, we need to see that breadth starting to turn back up, seeing that energy of the market coming in to support these prices. So watch that carefully if we don't get that happening today. Let's take a look at our economic calendar here on the day. In our economic calendar, we don't have a whole lot going on, but the Mac Daddy of the day is going to be that government employment situation number. Now, if you remember, the ADP report, which we rallied heavily on, that ADP coming in at 54,000, showing the declines in private payrolls. That number on ADP often is way off from what the government number is, but we celebrated big time on that number, really hoping apparently that our jobs numbers are bad enough that the Fed does cut rates. So if this number comes in higher, and you can see a government number in here is suggesting 75,000 in private payrolls coming in. That's a big difference from that 53. This would be, I think, kind of that sweet spot here for the market. So watch that carefully here. If we happen to miss on that number, though, and really see a sharp decline, then I would look for the market to continue in its hopefulness of that rate cut. So watch that carefully. We're looking for 77,000 in non-farm payrolls. We are looking for the unemployment rate to tick up to 4.3%. Yeah, everything else is staying pretty stable. 3% increase on monthly earnings out there, and just a 1/10 decline from 3.9 to 3.8 on annual earnings for average hourly, and then work week staying average the same in here. So watch that closely today. This could be a substantial market mover, particularly if we get something in there that creates some worry about rates here. today. Then we've got that Baker Hughes rig count, which probably nobody's going to be too concerned about. We're going to get all of our inspiration from this today. And when it comes to earnings, we don't have much for inspiration on those earnings. The only notable here today, we've got ABM reporting this morning. That's really it on the notables here. We do have two earnings reports. IMPP, a $3 stock that trades very low volume, so I don't think that's going to impact us at all. But keep an eye on ABM here. And that's the only real notable that we have for the day. So it's all about that jobs number. That's going to be a real key player here for today. So keep an eye out for that. And that number comes out here at 8:30 a.m. Eastern time. So watch carefully there. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, if you can please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that quick favor, click that thumbs up button, leave a brief comment. That helps the channel to grow. Thank you so much for everyone who does take the time to do that. I do truly appreciate it. And your kindness, your support is always humbling to me. Thank you so much. Let's take a look at some of these charts that could be setting up for today. Remember, everyone, they are not recommendations to buy or sell any security. You need to do your own due diligence. Be very careful in this market and make sure you have a plan to protect yourself if we do happen to come along with any kind of a stumble here in the market. Well, first off, one of the commodities I haven't been a little bit remiss in talking about is steel. Cleveland Cliffs here has been trying to make these very modest higher lows in here. If we see any weakness coming back into the dollar, I would start keeping an eye on some of these steel stocks. Cleveland Cliffs, STLD is in a nice bullish potential pattern here. I keep an eye on some of these steel stocks as well as some of those precious metals like gold. Remember PHYS. PHYS is a physical gold ETF where you're not just trading paper gold like in GLD, you're trading physical gold. You might want to keep an eye on some of those. It's a lot cheaper to trade. Watch that closely. Still holding very, very bullish here. Overextended, probably needs a rest, but very bullish. Also, PSLV is another one that you might want to take a look at. Physical silver ETF in here, and that's still looking very, very strong in a very bullish pattern. If we were to draw that uptrend in here, we probably need some rest here in that chart, but still looking very good. So I keep an eye on some of those commodity prices if that dollar continues to weaken. So watch that closely here. There's also, of course, the major concern of these tariffs and what the Supreme Court may do with those if they take up that cause from the president. Whether or not there's going to be paybacks that have to happen. So there's reason for precious metals to be a little bit elevated here. So keep a close eye on them. I think they can still find upside opportunity. I think it was Goldman that came out that said they now think that if we continue to see these kind of pressures in the market, 5,000 could be a target for gold. So we've got a long ways to go to reach 5,000. We're at $3,610 an ounce here at this very moment. So long ways to go if we're going to go to 5,000. So watch that carefully. If we take a look at some other stocks in here that are looking just pretty darn good, take a look at this EPD in here. We are seeing, although oil has been really weak, we have been seeing some of these oil and gas producers in here showing some bullish signs. So notice in here we've just kind of slipping out from underneath this downtrend here in EPD, trying to hold this higher low in here. And I'd watch that closely. If we can get any bullishness coming into these oil producers, watch for that opportunity that could start pushing on higher. We've been seeing things like CVX after their acquisition of Hess pushing through, breaking this major downtrend here as well, trying to show some bullishness here. If we get a little bit of pop in these producers, I'd watch for a little bit of opportunity there in some of them like CVX. So keep an eye on some of those oil sector stocks. Boy, I got to tell you, one of the things that really had a good day yesterday, and that was the financials. With the hope of a rate cut, the financials just surged hard yesterday, so really pushing up. Nice bullish pattern here in XLF if you wanted a basket of financials, trying to push right on through. If you want some individuals, pretty hard to go wrong here with JP Morgan. That's looking really strong. Things like Citibank pushing up in bullish patterns, looking good. So I would watch some of those financials. They're looking good. And you can even go into some of the credit card areas here. Visa trying to break this major downtrend here in the chart, holding that higher low. You might want to take a look at Visa. MasterCard was looking really good yesterday. I'd placed a price alert in here, and we're popping up through that price alert here at MasterCard. That's looking good. American Express showing bullishness here, trying to push on through to the upside as well. I would keep an eye on some of those. It was interesting yesterday that we did see some movement in telecoms. Now I have a bias here. I've been holding AT&T for a long time now, a very nice profit in this trade, so I am biased on it. But if you look right in here on my weekly chart, still pushing on higher. We had a nice little stretch here in some of those telecoms, so watch that carefully. Some of these big divvy payers might be hinting that we're a little stretched here, so watch that carefully. We saw Verizon, which it isn't the best looking chart, but because of the volatility, but we've got this break of this downtrend in here. We're holding a support level in here in the chart. Volatility is a little high, but if we can continue that push in here, Verizon might be something to be watching for a pickup here. And take a look at MSI, Motorola. Boy, when's the last time we talked about Motorola? Motorola pushing up nicely here in the chart, breaking through, coming up here, testing some resistance in here. If we can hold some support in a little rest or consolidation, I would look for that next opportunity that Motorola could push on through here to the upside. Looking pretty darn good. Now, you guys know I have been talking about a Seagate here for a long time. Had this alert in here, talked about it over and over and over, and my goodness, what a run this has made since it broke this consolidation in here. Looking good. It's one of my favorite patterns when I find these resting consolidations in a bullish chart, to just wait for that next move. What a run in Seagate. Any rest or pullback in here, I would look for that next opportunity. And the same thing is true here on WDC. Wow, what a run here after breaking through that consolidation in here. Nice push to the upside. Any rest or pullback might set up an opportunity there. Keep an eye on that guy. Take a look at Roblex. Now, Roblex struggled in here for a little bit, but with that bullishness that we've got coming back into the market, I think this might be of interest again. So pushing up as we rest out here toward this trend, I would be looking for that next opportunity for that to potentially push right on through to the upside. Looking pretty good in there. GE making some moves in here, trying to break through some resistance here in the chart. I keep an eye on GE, might stretch on through to the upside. Having a good time. If you're looking in the big tech sector, boy, Google is a place you're going to have to watch. It started down a little bit yesterday morning and then reversed in the bullishness of the day, pushing us right on up. Google still showing lots of strength here. Little rest, little pullback. I would look for a potential opportunity there. And Apple had a great day yesterday as well, pushing on through, breaking through some resistance. So again, little rest, little pullback in there. I might be watching something in there in the chart. In Amazon, I don't know if there was news yesterday or something on Amazon, but holy cow, it just popped, completely reversing where it was going in a big stretch in here, pushing back through some resistance. Notice that we closed at an all-time high here in Amazon yesterday, and showing lots and lots of bullishness in some of those big tech giants. So with that, guys, hey, I'm running this video way long. I want to wish you all a fantastic day. I want to wish you great results in your trading, and also I want to wish you and your family a wonderful weekend. Be careful, be safe. I'll see you back here bright and early Monday morning. As always, I wish you all the best.
Black and white candles, my stars in the dark. Price is my king, got that fire and spark. Rideways my ranch on the trader's trail. Trading with heart where the profits prevail.